In this video, we will explain the Reserve Bank of India's Prudential norms on declaration of dividends for small finance banks 2025. These directions have been issued to ensure that dividend payments by small finance banks are made in a prudent, sustainable, and well-governed manner. Let us understand the intent of these guidelines and their practical impact. Dividend declaration by banks affects not only shareholders but also depositors and the overall financial system. Through these directions, the Reserve Bank of India aims to ensure that dividends are declared only when a bank's financial position, asset quality, and capital adequacy are sufficiently strong. The focus is on long-term stability rather than short-term profit distribution. These guidelines are formally titled the Reserve Bank of India, Small Finance Banks Prudential Norms on Declaration of Dividends Directions 2025. They came into force with immediate effect and are applicable to all small finance banks operating in India. To understand these directions clearly, certain key terms must be noted. Capital to risk-weighted assets ratio, commonly known as CRAR, indicates the capital strength of a bank. Dividend includes both interim and final dividends. Dividend payout ratio refers to the proportion of net profit distributed as dividend. Net non-performing asset ratio reflects the quality of the bank's loan portfolio. These parameters form the basis for deciding dividend eligibility. The responsibility for declaring dividends rests primarily with the Board of Directors. Before making any recommendation, the board must evaluate the bank's current and projected capital position, the impact of any interim dividends already paid, findings from RBI inspections, auditor observations, provisioning adequacy, and a bank's future growth plans. Dividend decisions must always protect the interests of all stakeholders. A small finance bank is permitted to declare dividends only when specific prudential conditions are met. The bank must maintain the prescribed minimum capital adequacy ratio over the previous two financial years and the current year, along with acceptable asset quality during the year of declaration. In cases where capital adequacy is met only in the current year, stricter asset quality thresholds apply. These conditions ensure that dividends are paid only from a position of financial strength. In addition to financial parameters, the bank must comply with all applicable provisions of the Banking Regulation Act and RBI regulations. Dividends may be declared only after meeting statutory reserve requirements, provisioning norms, and payment of staff-related dues. Importantly, dividends can be paid only out of current year profits and only when there is no regulatory restriction imposed by the Reserve Bank. Even when a bank is eligible to declare dividends, the payout is subject to limits. The Reserve Bank has capped the maximum dividend payout ratio at 40%. The permissible payout level depends on the bank's capital adequacy and asset quality. Banks with stronger financial metrics are allowed higher payouts, while those with weaker indicators face stricter limits. To maintain transparency and prevent excessive distribution, the RBI has introduced important safeguards. Extraordinary or one-time profits are excluded from dividend calculations. Profits affected by auditor qualifications must be appropriately adjusted. Dividends cannot be declared from unrealized gains or illiquid valuation adjustments. Any request for dividend payout beyond the prescribed limits is not permitted. Once a dividend is declared, the bank is required to report the details to the Reserve Bank of India. This reporting must be done in the prescribed format provided in the annexure and submitted within 15 days from the date of dividend declaration. With the issuance of these directions, earlier RBI guidelines on dividend declaration for small finance banks stand repealed. However, actions already taken under the previous framework remain valid. In case of any ambiguity or interpretation issues, the decision of the Reserve Bank of India shall be final. In conclusion, the RBI's 2025 directions on dividend declaration aim to balance shareholder returns with financial stability. By linking dividends to capital adequacy, asset quality, and governance standards, the RBI ensures that small finance banks operate responsibly and sustainably. Dividend declaration is therefore a strategic and compliance-driven decision rather than a routine distribution of profits. Thank you for watching. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support and handling complaints, risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BAT, and ancillary regulations and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, if CSCA comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.